Let's talk about what we're doing on the euro dollar. Let's go through some IPDE. Identify. What is price action doing? What is price action done? Where is price action at? What would you guys say? I'll start it. Price action is bullish. Now we've had a few days, 7 in a row of bullish candles. Where are we at? You guys want to answer that one for me? Our IPDE process: identify, predict, decide, execute. For you guys that are new, this is the 4-step process that we use whenever we are analyzing a chart to give us consistency in what we're looking at. Consistent analysis plus consistent execution equals consistent results. Easy formula, harder to execute in real life. Yeah, we were at a previous level of structure, right? If we draw out some ebbs and flows, again, I never know which ones are the ebbs and flows. I guess the ebbs would be the retracements and the flows would be the moves back down, right? A good practice, something we talk about in the foundation course, because if you do this, you can pretty easily identify either levels of structure or zones of structure. So safe to say we are trading in a zone of structure. There's an even-handled number there as well. So if I had to force you to think about a direction that you would be interested in as we're trading at a previous level of structure, would you be interested in buying or selling? Probably selling. So what you can do is, someone says buying. Oh no, you don't want to buy. You don't want to jump when your head is close to the ceiling. No, you don't want to buy at structure. You want to buy once it's violated, right? Just like you don't want to buy at resistance. You don't want to sell at support unless you're trading a very specific breakout signal. So if price action is trading at structure, you're probably looking for shorts. If you're a counter trend trader, you're saying, okay, well, I'm waiting for the market to run out of steam so I can get potentially short. Or if you are looking for buying, you're looking for a violation of that level, because if we were to break and close above that level, then our prediction would be a little bit different. Then our prediction would be like we're likely to continue lower. So again, that whole IPDE process is to set up your directional bias on the market. So you can tell yourself either, hey, I am interested in this type of trade, or I'm not interested in this type of trade, but I am interested if this future thing were to happen. And then you go down to your lower time frame to expand on an idea. So if we're looking for a counter trend trade, the cool thing I like about this right now is we have a nice little shelf that we can come back to. Right? Again, if I just draw on my little wigglies and jigglies, my ebbs and flows. Again, this is a remedial practice that I tell you guys to do. Many of you guys don't do it, and you never get comfortable analyzing the market. But you do this, and it pretty much tells you where the important levels in the market are. So this is where I would project if we were to get a retracement. This is where I would project that retracement would come to. So as my counter trend brain works, what I'm saying to myself is, if I get reason for entry in this area, I can look to sell down to this area. And then I can ask myself, is there enough room for trading? Is there not enough pips available? Is it something I should take serious or not? Right? So now the next case is we got to ask ourselves, and this is where you turn to your rules of engagement in your trading plan. We looked at a very nice trading plan yesterday. And you ask yourself, what do I need to trade? Right? So what are some things that you might need to trade? Let's type in some ideas. There could be a lot of things. Obviously, when you develop your trading plan, you have your rules of engagement. You have the specific things that you need. But what are some things to trade? You could think about it like a CTS checklist, right? Shoot me some stuff. Well, so before we get to entry reason, what are other things? Like what are clues that may tell us that this is a good place to trade. There we go. So I like let's hold through bar reversal for later. RSI, extend it. So that's overbought in this scenario. We've got RSI divergence, something you can look for. What else? Even, let's call it psych number. Even handle number, but psych number. What else? What else? Nope. Lower low, lower close is an entry reason. Those are good ideas. Just want to say that that's next. So we want to separate those entry reasons are kind of the last trigger that get us into the trade. These are like, how do I determine this is a good area to trade? Yep. So that's the process we want to go through. One, how do we determine that this is a good area? This is us building our case for entry, taking our clues, doing our detective work, and deciding that, hey, this is where I think the turnaround is going to happen. And then the actual reason for entry, like the 3-bar reversal or the lower low, lower close, that's the trigger that says, if this happens, that's when I'm getting involved. So we want to save that for later. That would become the I guess the execution part. Daniel says, ooh, we can do Bollinger Bands, Keltner channels, EMA. Okay, let's expand on that. So if Bollinger Bands or Bollinger Bands and Keltner channels, this is probably the obvious one. I'm assuming we would need to be beyond the band. Ooh, sounds like a Netflix documentary on since I was singing "Tell Me Why" earlier, the Backstreet Boys and NSYNC, Beyond the Band, the dirty, off the studio secrets of your favorite boy bands, or a K-pop series, yeah. All right, so yeah, Bollinger Band. Am I assuming or Keltner, either one? Being outside the band, beyond the band. I like that. So let's call it a vol band. Ann says 1-to-1 measured move. I'm going to take these. Oh, sorry, I'm going to take these vol bands off because they make things look creepy. But someone said moving average, EMA. So how would we use the EMA in this case? What would you be looking for with the EMA in this case? What would you say? And if you can give me an EMA of your just. Whatever one, just so I have one on the chart. If you have a specific one you like, if not, I can put one on. But how would we use the EMA in this case? And this is an open question to anyone here in the group. Deceleration around 2050, 20 cross. Okay, so the cross. So we would need confirmation of the cross. Okay, so let's do a 20 and a 50. So that's going to come later, but that works. That works within our theory of things that we need. Here's our 20, and our 50 is going to be way below. So we're going to have to wait. Now I can tell you, with this specific case, the move is probably going to be over by the time this cross happens. But the idea of waiting for a moving average cross, yeah, that could be, if you're a moving average person, that could be certainly doable. All right. Did I miss anything else? 1-to-1 measure move. Okay, going back to the technical stuff. I like it. We're not going to have it, but I like it. Straight off the CTS chart. It's actually a little closer than I thought. We'll leave it up there. It's right above that level, but close enough. We'll leave it up there. I liked it. I take it back. I like that. Fibonacci extension. We can take it from the same level. And I'm dragging these things from our most recent swing low to swing high here. So Fibonacci extension from our swing low to swing high right there. I think we're at a 127 right now. No, we're going to be at a 1414 right now. We're going to have a 120, 1618 a little bit higher. Watch me now. I'm good. Oh, baby. Look at that. He's so good, right? So we have a 1618 lining up that AB equals CD. That's a delightful level up there. At a mini psychological number. I like that. Yeah, it's a little bit above the zone, but price can get there as long as it doesn't close there. All right, I like the way you guys are thinking. Anyone else? Good job. Now, for you guys that are unfamiliar, when you get to it, you're going to learn something in the mastery course about the CTS strategy. And essentially, the CTS strategy is the combined technical score strategy. What it is, and we give you kind of a default listing of things to follow, but I encourage that you add your own. But pretty much you're taking all these clues, all of the important things that you learned about technical analysis. And again, take the things that are important to you and move the other things away. So if you're like, Akil, I don't care about no stinking moving averages, don't put moving averages in there. If you're like, Akil, I don't believe in Fibonacci, take the Fibonacci out of there. If you want to add Bollinger Bands or add psychological number, add those in. But essentially what you're doing is you're all of the things that you list, you're assigning it a point value. And pretty much you're giving yourself a minimum of, if I have this many points, then I take the trade. If I don't have this many points, then I don't take the trade. There's another level of it too, where it's like, hey, if you have a score in the higher third, that's a full position, middle third, maybe half position. So you're risking more on the better opportunities, risking less on the worse opportunities. You can do it that way as well. There's tons of ways you can customize it. I used to have non-negotiables in mine as well, meaning I had a required score, but there were certain things that I had to have. Like I could have a CTS score of 1 billion, but if I didn't have structure, I couldn't take it. So that's, a way you can look at it as well. But yeah, these are all cool things. So pretty much all of this is to determine that I like this zone on the chart. I like this level on the chart. Now, double top is one as well. We didn't add that, but we can put that as well. Now we go to the people that wrote it in earlier, where the next part is once you've decided that, hey, I like this level, I want to get short here. Now you're waiting for your reason for entry. And real quick, I wrote out divergence if you guys couldn't see the divergence. Here it is right here. Our lowering highs are hiring lows. There we go, right there. Right? Now you decide. So now I use that if-then syntax. If price action gives me lower low, lower close, then I enter. If price action gives me double top, then I enter. If price action gives me 3-bar reversal, then I enter. And of course, stops and targets added to that. So yeah, I would love to see this thing push up a little bit higher to the highs. I don't think you're going to get a great risk reward here because in my opinion, stops need to be above this level of structure. And if you get a lower low, lower close somewhere in here and targets are there, you can kind of just look at it and say, hey, this ain't going to work, buddy. This ain't going to be it. But if you get a nice entry up in here somewhere, targets or stops going to be above there. Our targets, unless anything funky happens, could be back down here. And you got something nice setting up. So well done, guys. Good job. Daniel says, oh, volume 2. Yeah, we can do some volume. Volume would help with targets and entries. Let's do the entry version of volume. I'm going to erase the moving averages or just I'll minimize them. Sorry. No, get out of here. Get out of here. Let's see what volume looks like in this level. Ooh, look at that. Big vol. We got some big vol in that level. So yeah, we got some confirmation right here. Interestingly enough, however, and we talked about this a lot in the past. So I told you I like targets right here because of structure, right? This blue line. What don't we have at that blue line? And this is the main reason or the main value I got from volume is allows me to make little changes, especially being a very risk-averse trader. We don't have a lot of volume there, right? So my structure brain says, hey man, previous structure resistance, broken, should act as support, exit, and get out there. But ain't no volume there. So how much does the market actually care about this level? Not as much as I thought. So perhaps what this means is that, hey, instead of shooting for targets here, and I'll do a little comparison. Instead of shooting for targets there, what if we shot a little bit lower to the volume spike and the next volume spike and the even handle number, psychological number. Look what we just did. We went from a 1.68 to a 2.8. You see how those little differences can have a big impact? I was talking to a trader about this the other day, and I was showing him the example of like how, I haven't really changed much in my trade. I've gotten slightly more aggressive, but the main thing that I've done is just, this is just experience in the market and hours, the massive amount of hours I spend on charts over 20 years. I've gotten really good at making predictions. Again, I try not to brag about myself at all. Mainly that's just not my person. I am incredibly, I am the two H's, guys. I am incredibly handsome and I am incredibly humble. Some would say I'm the most handsomest and humblest person out there. And if there were an award for both, I would certainly win it. But aside from that, I don't really say much about my trading because I believe in market karma and it's just not my personality. I'm just too incredibly handsome and humble for that. But if there is one thing that I would give myself credit for aside from being handsome and humble, it is I've gotten really, really good at making predictions and predicting where the market, not speaking obviously, right? Predicting where the market should not go to if I'm right and where the market should go to if I'm wrong. And that's allowed me to get really, really good with stops, meaning my stop losses are typically at a level where if the market goes there, like I'm dead wrong and I'm wrong for as little loss as possible. But it's also allowed me to just like very incrementally increase my wins by shooting for a little bit more. And I was talking to a trader about, hey, they're like, I was, sharing a trade. I'm like, yeah, I just, on this trade, I was looking here initially, but then I shot for like right here. And they're like, okay, well, what? You made like 10 extra pips, like whoop-de-doo, big deal, Akil. And I'm like, well, yeah, on this one win, but you think about the amount of wins I have per year. I probably typically have 100 plus wins per year, right? That makes a big difference when you get a little bit more, right, on each win. It's the whole thing where Jason knows the stats on this better than me, but it was like if you saved like $1 a day, and it's like, okay, $1 a day, it doesn't really make a difference. And then you look at it at the end of the year, and then you look at it at the end of the year after that, and you look at the year after that, right? It compounds and makes a massive difference. So the problem is professional traders understand the power of small changes of 1 degree of getting better. A lot of struggling traders don't understand that. They think the small change is a waste of time and it needs to be the big change. And the irony of that is that the big change that they're looking for is nothing more than the small change over a long period of time. Mic drop.